Funding for Market Journal is provided by the Nebraska Soybean Board and the Nebraska Corn Board.
Growing more with less is the mantra of Nebraska's corn farmers, and they're using incredible technology to do it. Soil moisture monitors let them know when their crop needs water and how much. GPS systems eliminate overlaps in the field, saving fuel and money. New hybrids reduce the use of pesticides and increase yields. When you're talking new technology and innovation, Nebraska corn farmers are all ears. Nebraska's family corn farmers, sustaining innovation.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board and the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Elaine Kub looks at corn and soybean markets. Roric Paulman talks about water use efficiency. Tina Barrett discusses cash rents, and Dave Aiken outlines the deadline for unwritten land leases. Elaine Kub is our market analyst this week. The USDA's latest crop progress report shows corn and soybean conditions holding mostly steady this week. The best scoring is to the north in Minnesota, where 87% of corn and 81% of soybeans are rated good to excellent. There are 3 states where less than half the crop is placed in the top 2 categories: Indiana, North Carolina, and Ohio. In soybeans, Missouri is clearly struggling, placing only 29% of the crop as good to excellent. After a bad group of sessions last week, we started our discussion with Elaine Thursday morning by asking how corn and soybean markets had moved so far this week.
Well, they're basically quiet, and they have not, retested any of their recent highs. We don't even have soybeans back above $10 at this point, at least not in the new crop market. And it's a little disappointing because we had that big sell-off in July, and now nobody is really coming back in with the money or the excitement, which you would sort of expect to have coming into this August crop report that's coming up next week. It would have been nice to see the speculators or even the commercial market coming in here and putting some bullish bets on the market before we see probably some bullish numbers.
Why do you think they aren't coming back in?
Well, I think, especially from the speculative side, they're really scared off by outside markets. I suspect that a large part of the reason why the grain markets fell off all through the month of July is that outside speculators, the outside funds, were losing so much money, even in the Chinese stock market, to say nothing of the crude oil market that has kept on falling this week. It's now below $45 a barrel. The U.S. stock market has, there's a lot of markets that I think they've been losing money in. They had to cover those losses somehow. So I believe they probably sold out of grains, and now they don't necessarily have the optimism or the confidence to get back into them.
You wrote on DTN this week about the national average corn yield. Give me your thoughts on why that number might change when we see it come out next week in the August crop report.
Yeah, so every year about this time, this is the game. We try and guess what the national average yield is. And I think it's a handy metric, particularly for farmers. When we think about the way that any given field looks, we think about its yield per acre. And when the crop, the crop tours are going around, they're going to try and come up with a yield number. But the yield number this year, I think, is going to be fairly useless. I mean, in July, they said 166.8, but it could certainly happen in the August report that number could actually go up, even though we know a lot of the crop has been lost to drowned out spots or just excessive wetness in this El Nino year. But what's probably going to happen is the USDA is going to cut the number of harvested acres, particularly for soybeans. In the July report, they were still expecting over 99% of planted soybean acres to be harvested, and I think we are fairly confident that's not going to happen given the losses in Missouri and Indiana and Ohio and Illinois, not to mention other prevent planted areas throughout the Corn Belt. So I think it will be more useful for us to look at the overall production numbers or the ending stocks numbers and just sort of forget about what the yield looks like this year. It's probably not going to be a record either way, so I think the yield number itself is fairly useless.
Are you getting a sense that the market's starting to lean one way or the other, or pricing that kind of information in?
Well, I mean, looking at the market, it looks like it's been bearish. We've dropped off a lot of money recently, but when you look at various analysis and you look at the fields themselves, I don't think you can have a very bearish picture, except that the fields that are good are very, very good, and the fields that are bad are horrid, right? I mean, there is a lot of the sense that rain makes grain, and an El Nino year is generally helpful to overall yields.
How do you think that the markets might move here, and in so, where could you start to think about targeting some additional sales if you need to get going?
I mean, there's a couple of days or a couple of trading sessions here before you are going to have the volatility of the August crop report that is probably going to have some major changes and some major volatility one way or the other. So honestly, I think if you got the December corn contract to retest its highs above 388, if it gets into that 390, or I mean, we can hope for maybe even a $4 level, but probably not. And certainly if you saw the November soybean contract back above $10, I think you should think long and hard about making sales that you regretted not making during the month of July, just because there is so much risk of volatility in any crop report, but especially this one.
Do you think there's a chance that basis could firm up as we start to go further into August?
Yeah, absolutely, especially in the soybean market, and especially if they don't see some sort of bullish bump in the futures markets. We're already seeing nearby basis in the Nebraska-Iowa sort of region of 40 cents or more for very nearby delivery, but strong even in the last half of August and into September. And this is, you know, a reflection that farmers are not happy about selling below $10. And meanwhile, the commercial side of the market really needs to buy those beans. The export situation, we're already 50 million bushels above the USDA's projections. So, I mean, we could say that those projections probably ought to come up even if there's not cancellations. But price-wise, we're very competitive with Brazil. Even while Brazil's currency has gone down, it's at a decade low. I mean, definitely at a decade low, 28 cents, I think, right now. So yeah, there's lots of reasons to fundamentally think that the physical bean market is bullish, and the futures market has not reflected that, so the basis is going to have to.
Next week, we'll look at hog markets with University of Missouri Extension economist Ron Plain. Nebraska leads the nation in irrigated land, watering more than 8 million acres on over a third of the state's total farms. At a field day near Sutherland Tuesday, we learned how some of the state's producers are trying to ensure that water supply is safe and used efficiently. Roric Paulman hosted the event. He serves as the board chair for the Nebraska Water Balance Alliance, a nonprofit group with the goal of promoting sustainable water solutions. On his farm south of Sutherland, Roric says Paulman Farms has raised yellow popcorn, dry beans, sugar beets, winter wheat, sunflowers, corn, and soybeans. We talked with him at the event about his efforts in water conservation at his operation in southwest Nebraska.
You know, we're about 80% irrigated, about 20% dry land or rain-fed, and very diverse in a cropping rotation, very aggressive on conservation in terms of not only tillage but also with water and nitrogen, you know, all the inputs we are very cognizant of and have been for some time, not just because now that we have sub $4 corn and soybeans, but also when it was $6 and $7 is trying to set an example, trying to develop a process in a system that is helpful.
What was your progression for adopting some of these water management tools?
Well, we farm in 3 NRDs. We're in the upper and the middle Republican, as well as the Twin Plat NRD. So about a third of our farm is situated in each one of those districts, and each one of them has a unique operational system in terms of their expectations for a groundwater irrigator. So those led us to start that thinking process that if it works well there and it puts, you know, it keeps dollars in our pocket, but also is good for the resource, keep the water in the aquifer, then why wouldn't we transfer some of those kinds of things? And at that time, those guys were having to do it, and they did it really, really well, the producers in the Republican Basin. And so we started attending meetings down there and going to board meetings and some of their water resource stuff, and we're going, gosh, why don't we just bring that to the Twin Plat? And so we did that on the rest of our operation, and it just migrated. And so, okay, then EQIP comes and the cost share meters, and we have to be metered in the Republican. So okay, let's put some of those on. And so you kind of get the gist of just that entry level, but that's 30 years in the making in terms of how that pushed us into what's the right thing to do.
Are there tools out there that you're surprised aren't universally adopted in water management?
You know, when we asked our panel that today, I was very interested to listen to those young guys, and because I know a lot of those answers, and obviously economics is number one. Again, I go back to the $6, $4 scenario. I don't believe that that's really true. I think that ultimately it comes down to where you see your operation in 5 or 10 years out, and water is, we all have to have water. And our perception of it is that well performs, it delivers the water to that crop. You go into an urban setting and their perception is as long as that tap turns on, then we're okay. But if it doesn't, or if it's cloudy, or if it doesn't taste right, then it's something different. So that to me is really that kind of that thought process that's developed that drives that direction.
What's the recommendation for a farmer that wants to get more involved, whether it be starting or furthering the tools that they already have on their operations?
Well, the industry has evolved so much in the last 2 or 3 years, and even going back 5 to 7 years, a lot of this stuff was just coming here. A lot of it came from Australia and South Africa, where they're really challenged in terms of water. And so a lot of the other progressions, the varieties and the crops and the things that are coming down the pipe from there with all of the science that's behind those, but then tillage and so all of that's happening, but water has really been the least limiting factor, and until you get into a challenged area or you go through consecutive years of drought, then it really wasn't on the radar, because we can irrigate and we irrigate well, and so we get manufacturers that come here because they know they're going to get a great crop. So what do you do about that? And so in terms of how you pull off that adoption, it's indicative of your area or your NRD and what set of expectations comes with that.
Nebraska is so diverse from east to west, but as a state, how do you think other states see Nebraska as a water user or water saver?
I travel a lot and I'm a Nebraska diplomat, and I think a lot of not only the producers but of the structure, the NRD system and NDNR, in terms of how surface and groundwater have now in the last few years, as a result of integrated management planning or adaptive management or conjunctive management, all those fun terms that we want to toss out there, but we're a leader. There is no doubt about it, and often you'll hear me challenge the people that are around us that aren't doing that and says, you know what, if we're the #1 irrigated state in the nation, why wouldn't we act like it? And to our credit, we not only have a lot of tools in place to do that, but people are taking notice of it and coming here and asking us. Here's where I think we have a responsibility as a state is I'm not a legacy guy, but I think we have a responsibility as a state to have a legacy of water, not only in quantity, but quality. I think we're on the right path.
You can find more information about the Nebraska Water Balance Alliance on the Market Journal website. The 2015 Soybean Management Field Days will take place next week, running from the 11th through the 14th. The events start at 9:30 in the morning and will begin near Holdridge on Tuesday before moving to Alda on Wednesday, Wakefield on Thursday, and Greenwood on Friday. We recently asked Nebraska Extension educator Keith Gluen to outline the agenda.
At each location, we will share the same message, but we'll tweak it based on how the differences in growing soybeans. So we're going to be looking at irrigation management. We're also going to have a session on soybean production inputs and cost of production. In addition, we're going to be addressing seed treatments. That's a big issue right now in the soybean world. Nutrient management. Should I be using starter fertilizers when I grow my soybeans, or should I be applying a foliar application later on in the growing season? These are topics that we're researching at this site, and we've generated research information on in previous years for all these topics, so we'll be sharing that as well.
On the Market Journal website, you can find more specific information on the event's schedule and locations. The 2015 Soybean Management Field Days are free to attend and sponsored by Nebraska Extension with support from the Nebraska Soybean Board. According to USDA numbers released Wednesday, the average rental price of irrigated cropland in Nebraska for 2015 is $254 per acre. That's $8 off the record set last year and the lowest since 2012. For Tina Barrett's group of producers at Nebraska Farm Business Inc., the average cost doubled from 2005 to last year and now accounts for nearly a third of the total cost of growing irrigated corn. With lower commodity prices squeezing margins, we recently talked with Tina to discuss what producers should think about before deciding to give up a lease.
Well, cash rents have continued to rise over the last 10 years. We did see a little bit of a drop in the numbers from 13 to 14, but I think the way we handle a bushel rent, when producers give up just a flat number of bushels, we always have to put that in our system as cash rent, and we just assign a market value. So we certainly saw a decrease in the value of those. So I know that those ones went down, but I don't know that a lot of real true traditional cash rents really saw a decrease in 2014.
Normally we look at the cost to the renter, the person that's renting the ground, but what about the cost to the landowner that's actually giving it out?
Yeah, certainly. I mean, if we look at real estate taxes, they're increasing. It's not, anybody should be hiding from that fact. It's all over the news. And we've been seeing that cost almost double in the last 10 years as well. And that's certainly a cost that we know is going up because those valuations are already out. So we know 15's costs are going to be higher than 14's.
When you work it out, how bad are the net returns per acre?
Well, it's tough. Corn is maybe in the ballpark for some producers, depending on where the market. It looked like it was closer a little bit ago than what it is this week. But soybeans is really nowhere close on numbers, and it's really a tough thing it's been a good 10 years since we've had margins tight as far as planning for potential losses.
If you're actually tracking your numbers right and penciling this out, what are the expenses that you're figuring here and how they relate to your return?
Yeah, so usually we divide expenses in three ways. We look at direct expenses, those that are attributed to that crop that are going to go away, like seed and fertilizer and chemicals if you wouldn't use that field. Then we have overhead expenses that are those that are stuck, farm insurance, utilities, things that you're going to pay regardless of how many acres that you own, aside from maybe doubling acres or something like that. And then we have the non-farm costs that need to be covered, family living and taxes. So from a purely economic standpoint, when we're looking at maybe whether or not we want to continue cash renting a piece of ground, ideally we're covering all costs. If we can't cover family living and taxes, maybe we're hopefully covering all of our farm costs. Then we can at least supplement with non-farm income or cutting family living expenses, either way to make that work. If we can't cover overhead expenses, hopefully we're at least covering those direct expenses. Economic losses, if you can't cover direct expenses, it's not worth doing. And it'd be really great if it all fell down to the numbers and we could say, forget it, we're not going to do this. But there's a long-term consequence as well.
Yeah, that's exactly right, and there's a long-term consequence to not having that ground the next time comes around. So how much of a loss can you be willing to take in some of these operations?
Well, I think that really depends on the financial position that you're in. So if you're highly leveraged and you have very low working capital, you can't sustain those losses for long. If you've built working capital over the last 10 years and gotten out of debt, you can sustain losses for quite a while, knowing that at some point we're going to see a turnaround and see some profit again. That's just kind of the way it goes. So it's a matter of how long we think it's going to be this way and what position that you're in.
What about for the landowner, trying to set a price that works both for the landowner and for the renter?
It's really tough, and because you can probably go out there and find somebody who's willing to pay those high rents still. But the reality is it's not sustainable for any operation. And I don't think any landowner's really out there to put farmers out of business either. So finding a number that works is really important. If you've got a tenant that will share costs with you so that you can look at that and find a happy medium for the two of you, that's a great solution. Not always attainable, but that would be great. Otherwise, being reasonable and understanding that we don't have the profitability in farming that we had a few years ago, and that's something to consider too.
Tina recently wrote an article on cash rent considerations for Cornhusker economics. You can find that report on the Market Journal website. For producers with unwritten farm leases, the deadline for legally terminating those agreements is approaching. Earlier this week, we talked with Nebraska Extension Ag Law Specialist Dave Aiken to take a look at what happens after the September 1st deadline.
After September 1st, if the landlord and tenant can't come to an agreement on the new lease, it's too late for either one of them to terminate the old one, so they have to both agree to let the other party out.
Where does this date come from, September 1st?
Well, the Nebraska Supreme Court has said that the farm lease year in Nebraska begins on March 1st, and that you have to give 6 months notice in advance of the new year if you're going to terminate. So that's where it's September 1st.
Compared to a written lease, which would terminate?
Written leases terminate on the last day of the written lease unless there's a termination clause or a renewal clause that sets something different up.
All right, so what happens on September 1st if the landlord and tenant don't make a change?
Ordinarily, my recommendation to the tenant is that they try to make a deal, because if the landlord is unhappy and the landlord is held to a deal that the landlord doesn't like, the tenant isn't going to have the lease for very long.
Right. What about this year's tenants wanting lower cash rates, which I'm sure they would want at this point in time?
Yep, this is the flip of the typical situation. Typical, it's the tenant who's trying to hang on to last year's deal. Now it's the landlord that say, yeah, last year's deal looks great to me.
Right.
And so the roles are reversed, and it's the tenant, who wants out, and the landlord kind of wants to hold him. So, if the tenant doesn't give notice by September 1st, the tenant could be locked into last year's deal, which could be a bite.
What could the tenant do then in that situation?
Well, negotiate as the landlord and try to come up with a written deal, the best deal that they can. But it's a hard decision for them to make, because if it's a bad deal for them economically, then it's not an easy call.
Other than the straightforward things, why are written leases so important when you talk about renting land?
Well, it's good because it forces them, the landlord and the tenant, to address issues that they wouldn't ordinarily think of. Normally they're just thinking of, what's the rent going to be? But, you need to think about what happens to one of the parties. They get sick or incapacitated, something like that. What happens if the tenant's check bounced, the rent check bounces? What does the landlord do? How are they going to share production expenses? Are they going to make any changes in that? Right of entry, hunting rights. All these sorts of things are things that you might not think about, but if you're working, especially with an attorney, hopefully they'll point out these potential issues that could come up, so that you can talk about them, and then if something happens, you've at least talked about it before. You've got something in the lease.
So September 1 comes, there's no agreement. Can you still keep negotiating?
Yes, and typically that's what happens, is that they'll keep negotiating, and hopefully they can come to a deal. But if they can't come to a deal, then it's last year's deal.
Does the 6-month notice also apply to pasture land?
Not in Nebraska. This is not really as clear as we would like, but there's an old case that suggests it just applies to cropland, so that's the best we have for now.
Where do you recommend farmers, either tenants or landlords, go for more information about developing ag leases?
A great website is aglease101.org. It's got educational information, it's got blank lease forms, it's got worksheets to calculate rents and stuff like that. And so, it's got a lot of great information, but I recommend that landlords and tenants work with an attorney, in developing their particular lease.
Now, with this week's weather forecast, here's Nebraska Extension state climatologist Al Dutcher.
Well, folks, here again for the weekly forecast. Last week we indicated the models were showing that we were going to be in a northwest flow for primarily the majority of this past week. That's exactly what happened, although the placement of that northwest flow was a little bit off. It actually shifted a little bit more toward our west. So the main precipitation bands, instead of heating eastern Nebraska, really started to impact portions of western Nebraska, with some of the residual moisture moving into eastern Nebraska. So we actually see more precipitation in the southwest and west central Nebraska than was originally projected, and in some locations in eastern Nebraska a little bit less. So overall, we can't complain that we did receive precipitation. There are some pockets still of dryness that have developed over the last 30 days, and we'd like to see some of those eliminated, especially if the models are correct and turning toward a drier trend as we move into the middle of next week and beyond. So let's get to the models and see whether or not there is that chance for precipitation. The thunderstorms that moved through last night are now exiting the state this morning, and we expect regeneration along the periphery of this ridge to our south, primarily impacting the central and east central portion of the state and portions of northern Nebraska and southern South Dakota. Now, as we go into tomorrow, that ridge starts to shift toward the east a little bit and actually buckle somewhat. So we are going to see most of our moisture channel laying across a very extreme northern portion of Nebraska and the Dakotas, and we will see much drier conditions and warmer conditions as we get into the southern plains. So overall, it doesn't look like a big significant precipitation event expected tomorrow. As we get into Monday, however, we're going to see this ridge starting to build in. That produces a northwest flow across eastern Nebraska and Iowa. So any thunderstorms that develop are likely to come from the eastern Dakotas and move southeastward toward eastern Nebraska and Iowa, with primarily the major focus of the precipitation centered over the state of Iowa. As we go into Tuesday, the ridge starts to expand even farther toward the north, bringing much warmer conditions to a good portion of western Nebraska, and that northwest flow regime, which is the boundary of this eastern ridge, will shift toward our east, primarily impacting the upper Midwest and portions of Iowa, Wisconsin, and Michigan, with little in the way of any chance of significant moisture across the state. As we get into Wednesday, the ridge really starts to expand toward the east, bringing in that 90-degree weather across eastern Nebraska and keeping the precipitation pretty much north and east of the state. As we get into Thursday, we are looking at an expansion of that ridge to incorporate all of Nebraska, but we also have a big trough starting to move into the Pacific Northwest that will start to act on this ridge as we get into Friday. But more importantly, we will start to see this ridge break down as we get into Friday, and as we do, that will increase the chance of precipitation across the Dakotas, Montana, and some of that moisture might start creeping into western Nebraska, with the expectation that we will start to see some of that moisture moving across the state as we get into next weekend. So as we look at the temperature forecast, very hot conditions will remain in place across the western part of the state, especially as that ridge builds in. For eastern Nebraska, we will see pretty much normal to slightly below normal temperatures through Tuesday before we start to warm up to above normal temperatures as we get into the middle of next week, and later as that ridge builds in. 8 to 14-day forecast from next Thursday through the following Tuesday indicates that we will see some semblance of that ridge remaining in place with the warm air through most of the central plains. And in terms of precipitation, below normal precipitation indicated, although I think the northern portion of this is probably overdone because of that system moving in from the Pacific Northwest.
Thanks, Al. Today's interviews can be found on the Market Journal website and through the Market Journal mobile app. They include information on corn and soybean markets, water use efficiency, cash rental rates, and land lease renewals. As always, you can keep up with Market Journal during the week on Instagram, Twitter, and Facebook. Next week, Ron Plain will analyze hog markets. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board and the Nebraska Soybean Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Funding for Market Journal is provided by the Nebraska Corn Board and the Nebraska Soybean Board.
America's export of soybeans helps the U.S. maintain a positive agricultural trade balance. Nebraska contributes half of its soybeans for export. The protein and oil content in soybeans enhance the growing demand for higher protein diets. The Nebraska Soybean Board promotes research to develop new soybean varieties with higher protein and oil content for major agricultural markets. The Nebraska Soybean Checkoff, growing opportunity from the ground up.